Hello, and thank you for joining me for the Minute Weekly Update. The stock market was on fire on Friday, led by big tech. S&P was up 58 points, Nasdaq was up 255 points, the Dow was 395 points. Fed President Wheeler discussed timing of number of rate cuts for 2024 will all depend on the economic data as it's received. The Fed is confident that it's within striking distance to their 2% inflation targets. The market expectation, however, for Fed to cut rates in March now sits at 57%. Consumer spending beats expectation in December. The Michigan Consumer Sentiment Index jumped to 78.8 in January, soaring 13% from the previous month and beating analyst estimates. On the housing front, existing home sales dropped negative 6.2% year over year, a 28-year low. So this is now looking at more of the builders markets than existing home sales. Average mortgage rate ended at 6.6% according to Freddie Mac. What to expect next week? A lot of reports. Earnings reports from Tesla, Intel, Netflix, to name a few, are set to report this week. The PCE price index, which will offer the latest read on the Fed's preferred inflation gauge, inflation. So that's a very important number to come next week. A preliminary estimate of US fourth quarter GDP will also be released to see how fast the economy is growing. In other news, Google cuts jobs and shift to AI and massive layoff at Sports Illustration. Wonder what's going on there. Senate passes bill to avert a government shutdown, passed interim bill to keep the government open. On the political side, Ron DeSantis drops out of the GOP primaries and endorses Donald J. Trump. Thank you for listening, and I wish you a productive next week. Have a wonderful day. Bye bye.